Gautam Trivedi is with us now. He's, of course, our market master of the day, co-founder and managing partner at Nepean Capital. Gautam, great to have you with us here. Thank you very much for your time. Good morning. I believe you've just returned from a trip to the US and you've had the opportunity to sort of sit down with many investors. What's the mood like? I mean, positivity and optimism from what we read and what we hear and, our interactions in terms of attitudes to India and investing opportunities here seems to be at a peak. I mean, pretty high, pretty good. Go on.
Yeah, Prashant, thanks for that. I think the fact is that on this specific visit, I met a cross-section of investors, including a few college endowments, institutional investors, family offices. I think the interest in India clearly is at an all-time high. I've never seen this before, and clearly at the expense of China. So that's the good news. Having said that, I think there's a bit of a wait and watch with respect to incrementally putting new money to work in India. And that's coming from the fact that we are still the most expensive market in the world. So there's no, running away from that, unfortunately. And I think even though we've seen over $5 billion of selling by foreign portfolio investors in the past just over 2 months, in spite of that, I think a lot of that has been offset by domestic flows. So until the domestic flows don't slow down, I don't see a deep correction in this market. And that seems to be, I think, a bigger problem with respect to putting incrementally more money to work. So that's the first point, I think, which I came out with. The second, of course, was with respect to the price of oil, and I discussed that with a lot of people. What I found from them, and this is interesting, that a lot of them believe that, yes, the Middle East crisis and the war will be a prolonged one, unfortunately. That's at least that's the view, the general view out there. But the price of oil may not necessarily go up incrementally too much from these levels. It may cross $100. I'm not saying that it won't happen. But the fact is that as oil keeps moving up, the view, at least in the US, is that renewables become even more economical. So given that effect on renewables, I think even the oil-producing countries are pretty smart, and they do understand that taking the price of oil up way too much above $110, $120 will end up hurting them in the longer term. So I think these are some of the issues that I came back with.
Okay. So what does all of this mean from an equity standpoint, Gautam? Thanks a lot for joining in, and
Sure.
Season's greetings to you and your team.
Thank you.
This year has been very good for Indian equities, right? Do you think that we can build on to these gains in the next year as well?
Yeah, so we're up about 6.5% year to date in rupee terms. Dollar terms, of course, it's not that great. But if I look at the overall emerging market pack, and I think that's something which we are part of, if I take out China, which really, there's complete lack of interest in putting incrementally any new money to work in China, in spite of the valuations. MSCI China, for example, is at 9.3 times calendar 24 PE. We're at 20 times. So we're at 115% premium to China. And in spite of that, the lack of interest remains in China. So I think, like I said, I think the incremental flows from FPI investors will be muted into early next year until we don't see a significant correction in our markets. We did have a 5.5% or so correction from the peak in the month of September, but then again, we've seen about a 3% rebound. So I think that clearly remains a concern for foreign investors. And I think the fact is domestic investors have a lot of faith in their own country, which is India, and as a result, continue to put money into the equity markets. So that fund flow from domestic investors, to some extent, is keeping our valuations elevated. And as a result, I think to expect more portfolio foreign flows at this point would be a little optimistic.
Hi, Gautam. Good morning.
Hi.
Good to see you in. What about HDFC Bank? I think we chatted a couple of months ago, and you said that you're not expecting any big outperformance for the next 6 to around 9 months because things need to sort themselves out. But what's your view on the stock? Is it providing a good entry opportunity, valuations in favor? Banks have been really something that most investors have been looking at. Earnings haven't disappointed in that space. Your view on the big name HDFC Bank, because that's been a big underperformer, actually.
No, it has been an underperformer for the past at least 2 years that I've been tracking it. We own the stock, so full disclosure there. But I think from a longer term perspective, it's definitely the bank to own among the private sector banks, and that's the reason we have it. We also own ICICI and Axis, but I think given valuations today, You're getting it at nearly 80% discount to what it's historically at in terms of price to book. So, hello? Can you hear me?
Yes, go ahead.
We
Go
lost you for a bit. You're back with us. Please go ahead.
Yeah. So I think valuation-wise, it's very attractively priced. And my view is that from a foreign portfolio investment standpoint, if you look at the total pie of the money that foreigners have pumped into India, their mark-to-market value is about 650 billion. Of that, financials are about 33%. So that's the biggest chunk of the FPI holding. And if you look at it, even this earnings season, banks have been actually performing the best results that we've seen, and they've surprised us across the board, including the PSUs. I don't mean just the privates. So my view is HDFC Bank, you will make money over the longer term, but and now would be a good point to get in.
Okay, so that's on banks. I wanted to understand, I mean, generally every Samvat, every Diwali, we talk about the big themes to watch out for, right? And we sort of get some ideas, some nuggets here and there. If you had to identify for us a couple of big themes that retail investors should look at over the next 1 to 2 years, what would they be?
Well, I think you're looking at sectors that didn't exist until about 4 to 5 years ago, and I'm a big fan of the EMS business. If you look at the top line of these companies, of course, EBITDA margins and EBITDA performance has been mixed. But if you just look at the absolute top line of these companies, they're growing anywhere from 40 to 50% year on year. So I still think that the EMS business, while it's not necessarily cheap, a lot of these stocks have had a great run over the last 12 to 18 months. But the EMS industry in India is where the IT industry was 25 years ago. And a lot of these companies are going to be multi-billion-dollar market cap companies over the next 5 to 10 years.
But profitability-wise, Gautam, I mean, you look at some of these, EMS-type companies. The big ones are based out of Taiwan, etc. Margins usually are 1.5%, under 2% broadly across the board. And these are well-established companies over the last 15, 20 years. So is that what we should expect here as well, profitability-wise? Even as growth rates, as you say, absolutely, will be strong.
Yeah, so you have even now of the 9 odd listed companies, and more are coming, I believe, in terms of to get listed. If I look at the breakup of that, and the two companies that were the poster child of the EMS industry, Dixon Technologies and Amber, they're more assemblers rather than actually doing significant value add. I mean, they're great companies, but I'm just saying their business model is more assembly oriented. As a result, their EBITDA margins range from 3 to 3.5%. But if you look at some of the other companies which are doing printed circuit boards, RFIDs, these guys are having anywhere from 9.5 to 11% EBITDA margins. So really, you need to figure out where you want to put your money incrementally in, and you got both models working beautifully within the EMS space.
Okay. Well, we've run out of time, but I want to just get a quick word from you on some of these power stocks, because we are actually heading into a discussion with Tata Power. So just before that, very quickly, is this a space that you like and something that you would recommend?
It's a space I like. It's a space I've missed out on, and I'm honestly waiting for a better entry point.
Okay, then perhaps you'd want to listen into the conversation that we're having with the management. Gautam, happy Diwali to you. Thank you so much for joining us, and have a great, great year ahead. We'll, of course, chat with you.
Wishing all of you.
Yes, thank you for your wishes. But